Okay, so in this part, what we will be discussing about is Parsley's third part. Okay, so I mean, like, it's a second part for the video, but it's A3. Okay, so that's the question that we'll be discussing about. So explain how the lease arrangements should be accounted for in consolidated financial statement for the year ended 30th April 20x4, right? So the existing entry, right? So on 1st May 20x2 partially signed a lease, right? So the useful economic life of the machine and the lease term were both 5 years. So life and the lease term were 5 years. Lease payment are due advance. Okay, so lease payment for the first year was 1.2 million, right? Okay, and then partially rate of borrowing is 10%. The present value of the lease payment, excluding the payments made on 1st May 20x2, was 3.8 million. Okay, so let's account for that first of all. Lease. Alright, so we are 2 years ago, right? Isn't it? So x2, that means x3 will be the first year, right? So 30th April 20x3. IFRS 16 leases says that lease liabilities are recognized at the present value of payments that are yet to be made. This includes all fixed lease payments, variable payments, options, or variable payments based upon index termination penalties, option to purchase which is likely to be exercised, which is likely to be exercised, all right. The liability will be reduced by cash payment for the lease and will also increase annually based upon its interest, which is charged to SOPL, right? The lessee while recognizing lease liability also recognizes right of use assets. is initially it is recognized at the value of the initial liability plus any payment made before or after, before or at commencement date, and other direct cost. And if model is used, it is depreciated over the lease term is depreciated over the lower of the lease term and its remaining economic life right. After that, in the prior years, the right of use assets would have been recognized at $5 million. Okay, how will that be? It is basically $3.8 million, 3.8 million plus $1.2 million, right? So 1.2 million has already been paid, isn't it? Yep. First, so remember what we said over here. It includes, it's recognized at the present value of, or I mean like value of the initial liability plus the initial liability plus any payment made before and at the commencement date, right? So this was the payment that was made before, 1.2 million, and 3.8 million is our present liability because it's already given on the question, right? So easy. And then what would be our depreciation? Our depreciation will be, what's its economic life? Both have 5 years, right? So 5 years, okay. So depreciation will be and a depreciation of $1 million, which is basically $5 million divided by 5 will be charged also be recognized. So at the year end, the carrying amount of right of use assets will be $4 million. On the other side, lease liability, which is recognized, lease liability of $3.8 million, $3.8 million would be recognized initially. However, this rises by the interest of dollar. How much will that be? 10% of that, so 0.38. Dollar 0.38 million, which is basically dollar 3.8 million into 10%, right? By interest of recognized as finance cost. In profit or loss. So our total liability of $4.18 million will be recorded on 30 April 20x3. Alright, so that means after that, again 30 April 20x4, right? We need to change our, let's explain that first of all so that it will be easier. As per IFRS 16, if the lease term changes or if the payments change, lease term or payments, then liability should be recalculated and done accordingly. And a corresponding entry will be necessary for in right of use assets. case of is this company. In this specific case, the lease payment increase annually. Lease payment increase annually by the inflation rate. By the rate of inflation for the last 12 months. So it will be reassessed every year. It needs to be recalculated every year. Revised calculation. Right, so what I will do is I'll just bring it from here. Okay, so date, we are at 30th. Okay, so we need to calculate that, right? So it will be 1/5/20x3, right? 20x3. Okay, so same thing, but only the change will be in fourth, then fifth, so 4 years payment, right? So when is the other payment due? It's basically paid at in advance, right? So that means it will be due on, so it's already been paid on 1st May, so it will be paid on 1st of May 20x3, right? So during that time, how much should we pay them? We should pay them cash flow 1.3, right? Up 1.2 into, or what we can do is plus 8%. So 1.2 to 108 percentage. Yep, so plus 8% is right. Same figure, same figure. Make it smaller, easier. And then discount rate is 10%. Is equals to 1 divided by 1.1. In this case, it will be paid on that same particular date, so it does not need any discounting, right? It will basically be same. So in this case, it will be 1 divided by 1.1 to the power 1. 1 divided by 1.1 to the power 2. 1 divided by 1.1 to the power 3. Present value. This into this. Best. And our total figure will be this, right? Now it's better. Okay. Alright, so this will be our net present value. What we will do is that let's make it look good as well. Revised liability, right? How much was our earlier liability? It was 3 point something, right? Nope. How much was our liability? It was 4.18. So 4.18 minus this figure. 0.34. Lease. The revised lease liability is $4.52 million. So and the carrying amount is $4.18 million. So it is credited by 0.34 million or 0.34 million. Entry will be debit right of use assets. Or 0.34 million credit lease liability. Right? And what will happen after that? We need to charge depreciation as well, right? So what's our right of use assets now? So what has been our so it was 4, right? Okay, so we need to charge the depreciation on that as well. Right of use assets. the right of use assets will have a carrying amount of 4 plus, it was 4, right? Because we had one depreciation over here, and then carrying amount of right of use assets 4 million plus or 0.34 million 4.34 billion. So the depreciation for the needs to be recalculated to, and it will be how much is the remaining life? 4 years, right? So 4.34 and this plus this, and then this divide by this 1.08 million, right? Debit depreciation $1.08 million, credit right of use assets dollar, right? After this, what else do we need to do? We need to the depreciation is charged, carrying amount of right of use assets, right? Just copy this whole thing. Will be dollar 3.25. 4.34 million minus dollar 1.08 million, and then what we need to do is that what else is given in the question. And does it say that lease was paid? No, it does not say that, but the lease was correctly accounted for in accordance with IFRS 16 in the year ended 30th April 20x3. Okay. The only entry made in the current year is to record the cash payment made to the lessor within cost of sales. Okay, so you should not have done that. That means we need to remove it from cost of sales and debit it as lease liability, right? So what will happen is that, okay, let's talk about interest on the outstanding lease, which is basically this into 10%. No, we can deduct that. That means because the first year payment will be made during that period, so we don't need to account for that, right? Will be 0.32. Liability is $0.32 million, which is basically 4.56 million minus 1.3 million into percent. So this will be debit finance cost. Sorry about my mistakes with spelling, okay? I'm just typing it faster, that's why. So the carrying amount after the interest, the carrying amount of lease liability will be will be basically figure minus this plus, I've already calculated it, 4.84. Why is it so high? It's this figure minus this figure. This is this plus this, right? 3.55 billion will be $3.55 million, which is basically 3.22 million. $3.22 million plus this was our carrying amount, and then it has increased to by that means 0.32 million, right? and there is something else as well we need to. So cost of sales has to be reversed, right? Sorry, entry for cash payment is, so debit, what should we do? First of all, credit we should do COS, right? Cost of sales. And then normally how would we account for it? So basically our lease liability will go down, right? This will basically reduce our lease liability. Okay, should have done it over here. It will be good over there, because once we've made the payment then only we compute other things, right? Yep, it's good to keep it over there because that will be in order. If it was not advance payment, then it would be in different order. See, because we are making the payment and then only we will calculate the interest on the remaining part, right? On the remaining liability. Whereas if it would have been a payment which was in arrear, then what we will do is that we will basically charge the interest first and then only make the payment, right?